Hey guys, this is Alex Owari from ONG Tax and Accounting Services. So in this video, we're going to share with you a success story of a foreign seller on Amazon who filed a 1040 NR for tax year 2020, claimed the tax treaty, but then the IRS rejected the treaty. The IRS claimed that the treaty was invalid and went ahead to assess additional taxes against the taxpayer. So in this case, this foreign seller on Amazon was assessed additional taxes of $1,027,000 and over. It became a very disturbing issue for this taxpayer. We'll review how the taxpayer actually prepared his return, the 1040 NR that he prepared. We'll analyze why the IRS rejected the treaty claim during processing. We'll look at the concept of when a foreign person is engaged in U.S. trade or business, or when they are considered to have an effectively connected income, and when it is necessary to invoke the tax treaty. We'll also look at how taxpayers need to conduct the activities, how taxpayers need to respond to notices when some of these horrific issues happens. So we'll look at how the modes of communication, how you need to communicate with the IRS when you get notices like this. It becomes very scary, but being able to understand your situation and communicating with the IRS is one of the most important skills you need to have as a taxpayer or even as a tax preparer or professional. Alright, so before we start, let me just throw a word of caution out there, or throw a disclaimer that this video is for testimonial purposes and educational purposes only, and it's not meant to be a legal or tax advice to anyone. And if at any point in time you need a legal or tax advice, you need to consult with a competent tax professional who is going to review the fact of your situation and help you figure out the next steps from there. Secondly, let me also state that this video is covering only as it relates to foreign taxes. So foreign sellers on Amazon or any foreign seller that's selling into the US, this video is covering only federal taxation and it does not cover state taxes. So state taxes is basically out of scope for this video. So if you find yourself selling into any state or providing services into any state, I would advise that you consult a competent tax professional or an attorney to determine whether you have any state tax nexus, or whether it's income tax nexus, franchise tax nexus, or use tax nexus, or sales tax nexus. You need to figure all of those out. We have 50 states in the union, so it's very important that you understand that each of these states have their own rules and regulations when it comes to taxing foreign persons. This video is only for federal taxes only. It's not construed or does not mean to cover state taxes. Now finally, let me also state that this video is going to cover certain issues about, when a foreign person is engaged in US trade or business, or whether they have ECI, or whether they can claim a tax treaty. We will be presenting certain facts and scenarios. Now, those facts may be similar to yours, but what I would say is that you should not rely on this video to take any action on your taxes or your business return. You should always consult a tax attorney or a tax professional with regards to your situation and get a clearer understanding on how to proceed. Certain facts and circumstances may be similar to yours. Doesn't mean that you have to follow this video or the advices will be given. It will be very irresponsible if you proceed going through all the things that we've talking here without talking to an expert or an attorney or a CPA. Great. So with the disclaimer out of the way, let's proceed with how all this thing came about. So a CP11, as you can see from this notice, it's usually sent to a taxpayer when the IRS thinks that there's an error on your tax return, or the way you calculated it, your tax calculation is not the same as the IRS think it should be. So when that happens, the IRS basically makes their own calculation, and then usually when they do that, you end up owing some money. But in this case, this taxpayer wasn't very lucky, because the amount of money that this taxpayer is owing on this notice is a lot of money that can really give you sleepless nights. So we're going to go through it. Now, when we first look at it, we see, and this client is from Ukraine, as you can see from here. And I have a bunch of Ukrainian clients that sell on Amazon. And not just Ukrainian clients, I have clients from all over the world. But my prior video I have done was about saving one Ukrainian client $210,000. And then now I have another Ukrainian client that I'm trying to save from being assessed $1,027,000. So it feels like there's a magnet that attracts me to Ukrainian clients, and I love them. Anyway, so let's go straight to this notice. When you look at this notice, it says that the IRS changed certain areas on this taxpayer's return. So in this specific situation, the IRS is saying that they found a miscalculation on the taxpayer's 2020 Form 1040 NR, which affects the following areas of his return. In this case, they mentioned foreign earned income. And I start to wonder, why is a foreign person claiming foreign earned income? This doesn't make sense. I'm not saying a foreign person cannot claim foreign earned income in the US. They can if it's effectively connected to US trade or business. But it's usually not very common for a foreign person to engage in activities that will cause their foreign earned income to be taxed in the US. But there's a possibility, but it's not very common. So I look at this and things goes off for me. This is why it's also important to note that when you're looking at, when the IRS sends you a tax notice, you should not only focus on the first page. The first page, it's not really very helpful. You need to read everything, all the pages. So I kept scrolling, and then I look at what's really going on. Now, what really caught my eye was the changes to your 2020 tax return. So this is where I got to figure out what is really going on. So here's where I'm trying to take things serious. Here it says that the information was changed because of the following. We can't allow your tax treaty exemption. Your claim is not a valid treaty claim. We change your tax return accordingly. So what it's saying here on page 1, here as foreign earned income, that didn't make sense. But now this one makes sense to me, that the taxpayer really claimed the treaty and then the IRS rejected it. So let's take a look at it. We look at this one, and it says that on the 2020 1040 and outline 11, the taxpayer reported his calculation. According to the taxpayer's calculation, he reported 0 in adjusted gross income. And then the IRS says, nope, you should report 2.8. The same thing with taxable income. Taxpayer reported 0. IRS said you should report 2.8. And then the resulting taxes on 2.8 is $1,020,000 and over. We'll go into the tax return and look at what really happened, how the taxpayer prepared his tax return, and then see if we can take some inspiration or clue from it. You can also see that this notice was sent on August 2, 2021, but here the IRS says that it looks like the IRS is not playing around. They're not joking. Whenever they send you notices, they give you strict deadlines to follow. And they also tells you what you need to do in case you cannot pay it all. So here, taxpayer got notice August 2, but then the IRS gave him only 14 days to pay. And then also the IRS, they can be very considerate. They know that some of this money you cannot pay all of them at once. So they have some options that you can use to make the payment. Okay, so for example, you could call them and apply for a payment plan. You could do an offer in compromise. You could request a temporary collection delay and all of that if any of this applies to you. And that is only if this taxes the IRS is assessing it's a very genuine taxes and there's no way to fight it or protest it. Then you could go ahead and do all this payment arrangement. But in this case, I look at all the facts and the situation and I realize that, look, the IRS is not correct in this area. And we need to basically protest or challenge these taxes and bring all of it to 0. So we will look at what we did, and then we'll also review the tax return of the taxpayer. Now, to go into the next session, what I will leave you with on this page is that whenever you get a tax notice where the IRS says you owe money and you think the agency is wrong or the IRS position is wrong, you always have the right, as a taxpayer, you always have the right to challenge what the IRS is saying. But then when you're doing that, I would advise that you find a competent tax professional or an attorney to help you deal with some of this issue, because the reasons you would give would determine whether you can convince the agency or you can convince the IRS, and to also let them know whether you know what you're talking about. So whenever you get notices like this that says you owe taxes or even penalties, there's always an option. The first option is not to pay. I mean, you don't have to pay. You can argue if you think you have a very reasonable position not to pay the taxes. You can write them, you can call them, but usually when you write them, it's the best way to go, because you write them, you get a chance to tell them why you think their position is wrong and you are correct, and then you lay out all your facts, and they do a very good job, because the laws in the US work very well. And when the person that's processing or declining this, the person that's declining this treaty may not be the same person that's reading or reviewing your protest. So there's always somebody reviewing versus who actually rejected it. So the system works if you know what you're doing. And that's what I would say for now. All right. So right now, let's dive straight into the tax return. On this side, the IRS is saying that the taxpayer reported 0 on line 11. So let's go to the tax return itself and look at what the taxpayer reported on line 11 and line 15. Now, line 11 here is 0. The IRS, here's where the IRS says that, look, we're not going to accept this. You have to pay this. So they basically rejected the taxpayer's treaty. The amount that he's claiming is exempt from treaties 2.8. The IRS basically reversed this one and said that this needs to be added to this line 11, as your adjusted gross income, and it also needs to be the same as your taxable income. So when I look at this return, the first thing I ask myself is this taxpayer correct in reporting his tax return the way he did here? And I look at it and I don't see anything wrong with the tax return. It's saying that total income exempt by a tax treaty from Schedule OI. So he put 2.8 here. Now, let's go to Schedule OI, other information, and look at what how the taxpayer carried this amount here on 1C. So we go to Schedule OI, Item L. This is where non-residents usually claim their tax treaty position. So here too, one of the things that a taxpayer did correctly is claiming the tax treaty. He stated the country he comes from. He stated the article, the tax treaty article he's claiming, and then the number of months he has claimed this treaty. So this means that this taxpayer has claimed this treaty for the past 2 years, meaning that he's claimed it for 2018, 19, and there has not been any problem. But for 2020, looks like somebody is really not happy that someone can make 2.8 and still get not to pay taxes. So here, taxpayer did a good job by putting the IRS on notice on what he's doing. And it looks like he did provide some IRS publications and the Internal Revenue Manual. We'll go into these links and show you how the taxpayer was able to prepare this return by relying on these instructions and the manual. The instructions here says that, after you've entered all your treaty information and everything, you should enter this amount on line 1C on page 1. So we went to line 1C and we see that the taxpayer did what the instruction is requiring him to do. So here, one would also ask, how did the taxpayer arrive at 2.8 as his income? When I started, I've told you that the taxpayer is an Amazon seller. For someone to make about 2.8 on Amazon, that means that he's doing really well. So we look at what kind of information that the taxpayer used to prepare this return. And we can see that the taxpayer had 2 1099Ks from Amazon. So he was selling in the name of a single member LLC. And as you all know, a single member LLC is a disregarded entity. So a disregarded entity actually does not file its own taxes. It passes on the income and expenses to its owner. And in this case, the owner of this LLC that's selling on Amazon was a person. So it's this person who is based in Ukraine that owns this single member LLC. So the single member LLC made this money. So you can see when you add this amount here. So it looks like this foreign seller sells on two platforms. First, he sells on Amazon.com, which is the US side. And then he also sells on Amazon International. So it could be that he's also selling in Canada, Australia, and other places. So when you add this 77,183 plus this 2,766,000, that gives you the total of what he reported here as exempt. At this point, I don't really see anything wrong with how this taxpayer prepared his return. I think that he's done a great job. He's done a good research in doing this. Now, let me remind viewers again that this here, you should not rely on this tax return and create a similar or prototype of yours. You should always consult a CPA or tax attorney to see if this is the right way you should be completing your tax return. But I look at it and I don't see any problem with it. So let's also look at the entire tax return and see what else did the taxpayer do. We can see that the taxpayer, on his research, he knows that when you're claiming a treaty, in some cases you need to attach Form 8833. He did a great job by stating which country he comes from, the treaty article that he's claiming. He even stated where his income is coming from. And then some of these things he put here. So all of this looks good to me. This is a very diligent client and has really put the IRS on notice as to what he's doing. And usually when you do something like this, even when the agency comes back assessing additional taxes, this type of returns serves as a cushion or it serves as a protective return, and it gets the clock starting on the statute of limitation, additional tax assessment. So what the taxpayer has done here, he's done a very good job in putting the IRS on notice that, look, I exist, I'm doing something and I need to report something. Unfortunately, it did trigger some issues, which is causing his treaty to be rejected and now causing additional taxes. But like I said, if you get this kind of notices, if the law is on your side and if the truth is on your side, it's not something you need to panic. You just have to consult with a competent tax professional, tax attorney, who's going to help you out and figure some of these issues out. Alright, so I also said that the taxpayer did provide some links where he got his instructions from and what he's been reading so far. So we go into this 1040 NR instructions and see what he actually did. So we go here, we go to page 46, and it looks like he did read the instructions. So for example, page 46 of the 1040 NR, the 2021 version, the IRS in its instruction even provided an example of a taxpayer who is a citizen of Italy and was claiming a tax treaty based on Article 20. So Article 20 is something else. So in this case, the IRS provided an example and then showed the taxpayers or readers how to enter them on item L on Schedule OI. So in this case, you can see that the country was declared, the treaty, the type of treaty the taxpayer was claiming was declared, the number of months and the amount here. So everything looks good from here, and it looks like the taxpayer was really paying attention and basically replicated what is here to fit his situation on his actual tax return. Now we're also going to look at the Internal Revenue Manual, what he actually checked through when using the Internal Revenue Manual. So we look at the Internal Revenue Manual here. And if this is your first time hearing about the Internal Revenue Manual, it's an official compendium of internal guidelines for personnel of the IRS. So basically all this means is that the IRS have manuals which instructs their agents or people that are processing your returns to basically read and process your tax returns correctly. So it's basically a set of instructions that the agent needs to follow. On so many issues that has to do with the IRS, the agent has to look at the Internal Revenue Manual, what the agency instructed them to do. So it's not just processing your tax return. The Internal Revenue Manual covers so many parts of the Internal Revenue Code. So it could be how the agent is required to process your return, how the agent is required to send you notices, how the agent is required to respect your rights. There's so many things. So it's just a set of instructions that tells the agent what they have to do when they encounter certain situations. So in this case, we're going to go through the Internal Revenue Manual that the client provided. And in this case, we go here. It looks like the client relied on this here, which says that if the taxpayer, so here, this is the agency, this is the IRS instructing their agent on what to do. It's saying that if a taxpayer has entered a valid treaty article on Schedule OI and reported the exempt income on 1040 NR, line 1C for 2020 and later, accept the taxpayer's figures. Now the instruction tells them to accept the taxpayer's figures. As you can see, the taxpayer really did a good job basically doing all of this by putting all this information together. The question is, why did the IRS reject the treaty? Sometimes it happens. International taxes is a very complicated issue. Sometimes you have taxpayers that read certain things from somewhere, which is really bad information, and they use it to prepare their return. Sometimes the agent that's processing your tax return looks at certain things that really doesn't sound right to him, and he has to ask more questions. So in this case, you may have an agent who thinks that, look, 2.8 million, and you're saying you don't have to pay any taxes. We're going to reject it and see what happens. So sometimes they think that you as the taxpayer really don't know much to deal with these complicated issues, and they want to make sure that they get more information before they can approve this treaty. So sometimes it's not because you did something wrong, but it's because the agency needs more information. The fact that you may be very brilliant, you have read the instructions and you've put everything on the form, what you've put on the form may not be what the actual situation is. So it's important. The agency always have a discretion after you file your return to maybe reject it or to request more information if something doesn't look right. So in this case, I think that the IRS needed more information as to why you make so much money here and you're claiming a treaty and not paying any taxes at all. But at the end of the day, as I have stated, in the US, we work with laws. The laws work really well. If the law is on your side, if the truth is on your side, it doesn't matter how much taxes the IRS want to assess. If everything checks out right and you don't have to pay taxes, you simply don't have to pay taxes. That is how the law works. However, if we look into the law and we look at your fact and situation and we realize, okay, you are basically engaged in US trade or business, or you have effectively connected income and you do not have any treaty provision or treaty with your country, then you're required to pay the taxes. The tax is law, and so we apply the law to every set of fact and situation. Alright, so now we know that the treaty that the taxpayer claimed was denied. The IRS said it's not valid. So what's next? Now this is what got the client to contact me to make sure that we can help him communicate with the IRS to bring these taxes down. And here's where I'm going to tell you the fact of this taxpayer situation. This taxpayer is based in Ukraine. He had set up a single member LLC, which is a disregarded entity. Now that single member LLC was used to register on Amazon and sells on Amazon. The taxpayer and his LLC were engaged in FBA, which is fulfilled by Amazon. It's basically, if you know what Amazon is, fulfilled by Amazon means that you send your product to the Amazon warehouse. Amazon have its own employees. They pack and ship and deliver the product to the ultimate customers. The only work that this foreign person is doing is basically sourcing the product from maybe within the US or outside the US and sending it to Amazon warehouse. But other than that, this taxpayer has never traveled to the US before to do any business. He does not have his own warehouse or his own offices in the US. He does not have any dependent agent or exclusive independent agent. So basically all he's doing is FBA. Why did he receive a 1099? This is very common with many Amazon sellers. They set up the LLC, they go into Amazon to do the tax interview, and they think that the LLC is a US person, and so they complete a W-9. When you complete W-9, you get a 1099K, and that copy of the 1099K is sent to the IRS, and then you also get a copy. If you're a foreign seller selling through Amazon FBA or Amazon in general, you should be completing W8 BEN. If you're a foreign corporation, you should be completing W8 BENE. But let's say you didn't follow all these instructions and you still completed the tax interview like this client did, and he stated, he has a US LLC, and then he still went ahead to complete the W-9 and therefore got a 1099. So he felt like there was a need for him to complete this tax return. That's all good to me. Sometimes you may choose to file a protective return or whatever. But in this case, the damage has already occurred. And this is why they came to me to help them. So they came to me when they received this notice, and then I listened to their fact of the situation, and I realized they had a good case, and all we had to do was to prepare a protest letter or challenge the IRS position, and also to state that the taxpayer, based on all the facts, is not engaged in US trade or business. And even if the taxpayer is found to have been engaged in US trade or business, we have to also cross the second stage of the analysis to also state that the taxpayer's country, which is Ukraine, has a tax treaty with the US. So even if the IRS is not accepting our US trade or business argument, we're still going to use the treaty to invoke it and then reduce the taxes to zero. So that's basically the argument we made. One of the things you need to also check as a taxpayer when you get notices like this is also to go into your tax transcript. Every taxpayer that files a tax return with the IRS has a tax account that is sitting there. So if you know how to unlock that account and then you sign in or sign up to it, you'll be able to see some of the information about you and the tax returns that you filed. So in this case, because we have a power of attorney, we pulled the tax transcript and we could see that the notices that the taxpayer received is very real. It's genuine because the record of account also validates the same kind of information that the taxpayer received. So we put this up on October 5th, 2021, and we could see that the balances keep increasing. When you look on the first time the taxpayer received this, the balance was a little bit lower than this. So as time passes, the IRS adds more interest to the balance, and then because he fails to pay within the reasonable time, there's also a penalty that's being assessed. And so all of these things adds up, and then now he's being assessed additional $1,049,000 instead of the $1,027,000 we started with. And you can also see that it's showing the adjusted gross income and everything. So this tells us that, yeah, the IRS is serious. This is reflecting on the taxpayer's record of account, and it's going to stay for a long time or even cause the taxpayer to have other problems like garnishing, like levying his bank account or seizing certain assets that the taxpayer have. And so the earlier you take care of such situations, the better, because if you do not give this situation attention, the IRS has so many power within their jurisdiction to create some kind of a miserable situation for you. So it's always important that you respond to these notices in a very timely manner. Alright, so August 10, we sent in, our protest. We stated all the fact that taxpayer is not engaged in US trade or business, and even if they engage in US trade or business, we're going to use a tax treaty to bring all the taxes down to zero. And then on January 19, we received a letter saying, from the agency saying that they need more time to review the information that we've sent. And they said that they need additional 60 days. So it's all good. That means that they've received our protest and they are actually doing something about it. So think about it. We sent this in August 2021. In January 19, 2022, we got a response, but then it wasn't a good response because they said they need additional time. I need a response from the IRS. I need the issue to be resolved, but it's fine. Sometimes the agency needs additional time, and they really do. And so that's fine. On April 22, 2022, so we're still within 2022. So I'm very impressed with how this ended up, because this didn't take more than a year. Sometimes some of these things can drag on for a long time. Now it says we filed Form 1040X. We really didn't file any amended return. We just sent a letter to protest. So I'm not sure why it says we filed an amended return. Anyway, if you're also seeing my name here and my address, this is because my company have a power of attorney on file for this client. So whenever you have a power of attorney and you check the right boxes in the power of attorney form, the IRS sent you a copy of any communication they sent to your clients too. So in this case, I got my copy, and then it says that we have adjusted your account as you requested. So basically, I requested that we're not paying any taxes. Based on all the fact and situation. And once again, let me emphasize that when you're disputing a tax notice, it's not just something for beginners. You need to hire a tax attorney or a CPA to help you out, because you need to make a convincing argument. So for example, you need to review the Internal Revenue Code, the Treasury regulations. You need to support your argument with court cases. And you may support your argument with anything that you found in the Internal Revenue Manual that helps you, or even in the instructions. But usually you should focus more on getting your information from the Internal Revenue Code or the Treasury regulations or the tax courts cases that has dealt with some of these issues that has to do with U.S. trade or business or ECI or treaty claim. This is a good news because it came in and it says we have adjusted your account as you requested. Of course, my request was simple, was to reduce the taxes to zero. And I stated that the taxpayer does not have any taxes to pay because the IRS assessment of taxes was an error. That is why I got this letter saying that the account has been adjusted. It was a good news. So when I get good news like this, what I do is I go back into the tax transcript account again and then pull up the newest record of account. So I went in there. Okay. As you can see, I pulled this one up on May 1, 2022. And when we started, I showed you earlier, when I pulled one on October 2021, there was a huge amount of taxes on there. I mean, I can go back and show you. So here's the October transcript showing 1049, 1,049,000. And it's also showing taxable income 2843, 2.8. Now, when I go into the current one that I put for this year, you can see that all the adjustment has been done. All the taxes has been reduced to zero. So this is a really good news. And then you can see how it all started. You can see that the IRS assessed the taxes, they assessed the penalties. And then once they received our letter disputing or challenging the opposition, they reversed those taxes. So here you can see the reversal. So they reversed the 1 million here. They also reversed the interest here. And then they even end up giving some refund, 26.86. This is a refund from some time ago. But anyway, this is a very good story. And I must end by saying that if you are a foreign person, whether you're selling on Amazon, whether you're providing services, and you're filing a tax return, you need to be very, very careful. You need to at least seek the help of a competent tax advisor who is going to help you figure some of these things out. Because when it goes really bad, it takes a lot of time to fix things. If you guys need any help, if your treaty claim has been denied and you feel like you have a good position or reasonable position, you can always contact me and we can work together. If you have any questions, you want to file your tax return for an LLC or anything like that, I'm always here. If you have any issues with the IRS or the state regarding your taxes, I'm also here to help you. Name is Alex Owari at ONG Tax and Accounting Services, and thank you. And I will talk to you some other time. Bye.